The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. And your host, Darrell Martin, right here. Make sure you listen to us online anytime at TFNN.com under Tiger TV or on your mobile phone. 9 hours of live trading commentary a day at TFNN.mobi. Well, we got a mixed bag of results over here on the indices. We got the S&P right now is up 1.5 points. We got the Russell down 1 point. We got the Nasdaq up 16 points, and we have the Dow down 52 points on the day. So a little bit mixed markets trying to figure out which one they're going to do, right? So half and half. Usually you don't see that mix. So usually they're all up or all down, just a little bit different percent. But so, you know, a lot of strength in the Nasdaq and a lot of weakness right there in the Dow. We got over at gold. It is currently down 7 points right now. We got silver down over 1.5%. Copper's down almost 0.5%. We got oil down 78 cents on the day. And we have natural gas is down a 1% move as well. So pretty normal for natural gas. Usually has a lot of moves, 1 to 4%. We got corn down 8 points. We have soybeans down 6 points. And so a little bit of ag movement there. We got euro dollar currently down 41 pips. Pound dollar is up 47. Aussie dollar down 23. Euro yen pretty flat on the day. Just up a mere 2 pips on the day. Euro yen is currently, like I said, just up 2 pips there. We got US yen up 33. Pound yen up $1.14. So strongest of the yen pairs there. And we got the dollar CAD up 37 with the dollar franc up 19. So with that, what else do we have that we can check out, and what kind of opportunities might exist for us in the markets? And so I'm going to pull up a few things. We're going to look and see, you know, what we can, make heads or tails out of what's going on. One of the things I talked about yesterday was the ADP NFP report, and we had some decent moves on that, so we can talk about it. It's usually not the biggest mover for a news trade. Every once in a while, we'll get some nice moves on it, but usually not your biggest one that you're going to go after. And but before I dive into that one, we can look at the Dow. Looks like we got a nice little bounce right here off the one deviation low to high move. So we'll look for a potential up move on that. That might start building into the other indices across the board. And let's check out the other indices since we just wrapped those up. We'll look at them right now. And so we got the S&P sort of worthless at the moment, so it's flat. And we can go on over to the Nasdaq here. And it's been running on up. Looks like it's going to start pulling on back down. Again, we're about right at a deviation level. And so probably we'll start pulling back on that. I got a short signal there, so we'll see if that one works out. But definitely be closing out that long at this point if you're long the Nasdaq futures. So if you're an in-the-money spread, you can, binary, of course, you can continue to collect that premium. Looking on down over on the Dow. On the Dow right here, what we got is we do have about a one deviation move from high to low, and we got that sort of the same setup. All right, so now let's go and let's jump on in and let's look at the impact on some of the FX pairs off of the ADP NFP. Even though this isn't the biggest news tradable event that I trade usually, I mean, we can get some good moves on it, but it can be a good clue as to what to be looking for. If we get a big NFP move on ADP NFP, a lot of times that gives us a nice clue as to getting a really big move on the NFP report on Friday. And so if we go in and we look at the report, let's see, it came out at 8:15. Let me drop down to 5-minute bars so we can more accurately project this out here. So right here we got just a massive move down there that brought us down 28 pips. Wasn't really that massive, but right to a deviation level. We got a perfect volume spike. Again, I'm using volume over on the euro dollar futures. Okay, and then that's a one dev move from low to high, and then the thing runs back up right up to settlement. We get another volume spike, and the range from that low to that high pretty much within 2 hours of the movement. So, yeah, so 10:10, it came out at 8:15. So we got 52 pips. That's a pretty big range. Normally we don't get 52 pips on it. Now from release, if we take release to high, so 28 down, 26 up. So, about 50-something pips right there from low to high on the trade. And, again, two great volume spike moves right off of a deviation. And just nice, go long, go short right after the news. I mean, that's a perfect play. All right, so, so that gives us a clue as to what to look for potentially. On Friday, we ought to, see some movement there. Let me go over the numbers with you, how they came in, and what's coming up as well. So if we go over and look at the ADP NFP, came in at 238,000 on the non-farm employment change, and expectation of 199,000. So we saw some immediate dollar strength, but then it just pulled on back. Also, they did a revision on the last number. They revised it up from 215 up to 229. And if you're wondering what the ADP, basically they're one of the largest, actually the largest payroll processor in the country. And so they obviously have a lot of numbers on data, who's getting paid, who's not, how many people are employed, et cetera. It's a good statistical measurement. And so they make their non-farm payroll, and it's released a couple days ahead of the government's official NFP report. And it's basically the estimate of the number of people that were employed during the previous month and that change. So did it go up? Did it go down? And again, it's called non-farm payroll is because it doesn't include the farming industry. It also doesn't include government employees. So it's private sector, non-farming, non-government. Okay, so that gives you a background on that report. Let's see some other things we have coming up today. We have the Aussie dollar retail sales. And let's see, Aussie dollar retail sales. And let me pull up tonight. We also have the FOMCs coming out as well. But Aussie dollar tonight, it's a good potential butterfly trade. Maybe going in somewhere between 6 and 7 o'clock. Report comes out at 7:30, and using an 11 o'clock expiration. And so if you're doing this trade and we hop over on the Aussie dollar, what you'd be looking for is finding a contract that is below the market and above the market, ideally with at least a 50 pip range. The wider, the better. And expecting the market to do, a little volatile off of that report, but then settle back in because, again, the majority of the time doesn't even move 50 pips from high to low. So that's one way to play the retail sales report. And then the other report that we have today, let me look over at this, and I'll get it for you. We have the Fed funds, not Fed funds, sorry, the FOMC minutes announcement coming out. And so with the minute announcement, we can hop in there, and it's not really, I usually don't trade just the minutes by themselves. So they're not as consistent. What will be significant about the minutes report today is, remember, they just chose during the last press conference, they chose to scale back QE. So on their 85 billion back to 75 billion. So people are really going to be digging through those minutes to see what all was behind it, what were the yays and nays, and are they going to look to expedite that process even further? What clues were they using to make that decision? So therefore, what clues can we see going forward where they may continue to accelerate that decision or slow it down? And, because if they said this, and this happened, and this is why we lowered it, and all of a sudden we see that those things, NFP comes in at this, unemployment comes in at this, housing starts coming at this. Oh, well, they'll probably drop it again on the next one, and they'll drop it from 75 down to 65. So that will be like the guesstimates that people are making whenever that report comes out. So just be aware before those minutes come out that they are coming out at 2. If you're in a trade, tighten your stops. It may be a non-event. It may come out and you see like a 3-tick move. Okay, but it may come out and it may be a massively wild move if there's some surprises of the content of what are in the meeting minutes. And so it's always good to be aware, hey, the bus is crossing the street, or the bus is driving down the street, I'm crossing it. I need to understand that this bus may be going really fast or really slow. I'm not sure, so I might just let it pass and then hop back in. And I usually, if you can do a straddle, cheap, you might choose to go in and do a straddle or a strangle. Again, that's if you can do one really cheap. So what is really cheap, right? That would be the next question. But let's look at it. Let's see what is really cheap. And I'll pull that up. And let me see here. There we go. All right, so then I'll drag this over to the screen. And that'll populate here in just a second, so you'll be able to see it if you're watching right now on Tiger TV. And we'll go in and we'll pull up Scanner. And then we'll look at the spreads right now. And then we'll go down and go, okay, what instruments, what filters do we want to use? So let's say we want to look at, you could use indices, okay? Maybe even, your euro dollar, pound dollar, FX pairs. And we'll just say a minimum reward risk ratio of at least 0.5. So, but throughout, so we're going to do a straddle actually. So we're going to go and make this 100. We're going to make it 1 because we're only going to be interested in straddles. And I know that I don't care that it expires in 43 minutes. If I'm doing the straddle, I want one that expires at 3. So I'm going to put this at 45. That ought to get rid of everything that expires at 2 o'clock, right? Because if it expires at 2, it didn't help me on straddling the news at 2. And so just to, and then we got to make sure we have both directions. There we go. And then we can see, are there any good, what we would consider to be cheap straddles? And, if not, would it be good going the other way? So, let's see here. We got this one. This one seems pretty, it's off, yeah. Okay, so we're right at the market. So our floor on the buy, the 64.50, that lower number, that's the floor, okay? So we can't lose any additional money below it. The ceiling is the number we can't make any additional money above before buying. We still can make max profit. It doesn't matter how high it goes, and we're not really that worried about it. It's 130 pips till we get there. So if I'd captured 130 pips, I'd be pretty happy, right? So this one's 15, this one's 17. So combined, we're looking at, maybe 18 and 15. We'll split it together. 33 bucks. So to make a 1-to-1, that means I really need to expect a 66 pip move. We might get it. I wouldn't really be counting on it. Okay? So 66 pip move on the pound dollar on FOMC minutes. Not unless there's just a big shocker in there. Maybe 30 or 40 pips. So 30 pips would basically be at break even. We can go down, look at the NASDAQ. Not my favorite spreads to trade. I like the market. I just don't like necessarily the... Let's see there. There we go. We got that one. So 35.65. And so I'll go through it, and I'll sort of walk you through how I'm picking these when we get back from this break and how I'm analyzing them. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so just scrolling through some things we're talking about, what if you did want to try to do? And I would definitely be demoing this one because this is not one of my recommended straddles, but if you're looking for a straddle to do, and this is sort of a good homework step to help you get going over on Nadex to get ready for the NFP reports coming up on Friday. And it's just going through and choosing the scanner, choosing buy and sell, choosing $100 max risk and a 1-to-1 risk reward ratio. So right up here at the top, just a review for you right there. Okay, so you got the instruments, whatever one you want to look at. You got both. You got $100 max risk. You got a 1-to-1 risk reward ratio. And then we put 45 minutes so we didn't see the ones that expired at 2 because they'll expire before the announcement comes out. And then we're able to see all the ones. And so we're looking for ones that are lining up pretty much where the floor and the ceiling match, and they're close to where the market's currently trading, which is what that little difference in the color is. Okay? By doing that, then we're able to be able to go in and find, is there a good trade? So just because I know that this moves a lot doesn't necessarily mean that it's a great trade for me. And because the cost is too high. If the cost is too high, then I have one of two choices. One, don't do a trade, or two, do another trade, such as go the opposite direction. So, for example, when we had the FOMC the actual interest rate and stuff being released last time right before Christmas, it was too expensive on the pound dollar, and I went the opposite direction. It literally cost me what we're looking at right now. Okay, that's costing us basically, we got 18 plus 30, we about 31, bucks or whatever. So this costs about $30, $32. It was costing 70. Okay, I want to say like 73 bucks to do the trade, and I was like, that is ridiculous. So I just went in and I went the other direction. I was like, I'll just collect that premium because I expect the move to only be about 70 pips, and it went a little further. It went about 84, but then it came right back down and I collected the premium on the trade. So it's good to know what your expectation is so you can know, is this a good idea to straddle, or should I go in and go the other direction? So we looked at pound dollar, $30. Doesn't sound like a bad deal, except for to make 1-to-1, we're really going to have to basically get it to move, quite a bit. We have to make $30, plus we have to make the risk on the other side. So we really need about a 45 pip up move or a 45 pip down move off of the FOMC meeting minutes to make money, a 1-to-1 on this trade. Probably not the one we want. Over on NASDAQ, there's some pretty cheap ones. They can get a little bit, can be a little bit deceiving, confusing. Can look better than it is. Because NASDAQ moves in, quarters, but Nadex, and there's only 3 products like this, copper, silver, and NASDAQ, that have bigger tick sizes than the underlying. Most of them have small, like either equal to or smaller tick sizes. So on the Nadex here, it's 1 point. So if my risk on the trade in this case is, somewhere around, $13, then I'm looking at about a 20-point move on the NASDAQ for me to get a 1-to-1. So even though the risk looks really small, my movement requirement would be huge. And so I may not really expect the NASDAQ to move 20 points right off of this trade right here. And so let's go on down. We'll check out the Dow. So we got all these contracts here. We can now notice the Dow ticks the exact same, 1-to-1. Which is good. So let's see here. The benefit of the NASDAQ, by the way, the number one benefit is that if you're a small trader, meaning you only have a few $100 in your account and you're wanting to learn to trade the spreads, you can trade with very low risk. You won't make a whole lot, but you also won't lose a whole lot, and you can survive a lot longer to learn how to trade it. And it's just as a big trader, you're like, well, if the thing moves 20 points, I want to make a lot of money. And so I guess you could still do it. You just have to put up a lot more. But it allows you to trade if you have a smaller account, it allows you to trade a smaller size, basically. And it's almost like I would consider the Dow and the NASDAQ on Nadex, that I almost think that the NASDAQ was like a micro contract. Okay? So it's just, really, really small. But over on the Dow, let's see, what do we got here? We got a $50 move, $50 risk, so $28 and $22 there. So we basically would be looking at about a 75-point move on the Dow would be the expectation after the minutes if we thought we were going to have a 1-to-1. You don't think you're going to get a 75-point move, probably don't want to straddle that trade. Okay? So there we'll talk about what if you wanted to go the opposite. What could you do? How could you take advantage of it? We'll talk about that when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And, all right, so we're walking through these straddles step by step, how to put them all together. And looked at the Dow. So what would happen if you look at this and you're like, that's too expensive? You know, I don't think the Dow is going to move. I mean, it could, but let's say you just don't think it's going to move that far. Well, you could do the opposite. So let me show you what I mean by the opposite, okay? We're going to go up here, and instead of buying, we're going to sell. And instead of selling, we're going to buy. And what does that make our risk on this trade if we do this? Like, how does that actually, you know, all come out together on the trade? Well, the most I could lose on either side is $77. The most I could make on either side is $23. So if one side took max loss, the other side definitely won because it expired above the ceiling, so I got max profit. This is sort of like an iron butterfly. Basically, it's an iron condor. But the reason this works so well is my max risk is actually equal to my max reward on this trade. This is a 1-to-1, like doing a butterfly, but with a 1-to-1 risk reward and without having an all or nothing payout. So like, it would have to expire above or below. So let me go through and we'll throw the chart up and we'll do the numbers. And I am quickly learning to embrace, I guess you could say, this strategy, because I'm starting to realize there's just some massive benefits. One being good risk-reward ratio, 2 being lower probability of max loss. So just like how I like to do straddles over strangles, I'm looking to do these little, iron condor type trades over iron butterflies. And so if we go in and we look at this box, here's what we got going on. I'll draw a box on here for us. And we got 16.5 to 16.4. So right here down to 16.4, okay? And then we have another box. That was going to be 16.3 to 16.4 right here. And so what I'm going to do, though, is just a little bit different, is I'm going to, buy the lower one and sell the upper one. Usually I buy the upper one because I'm like, hey, I think it's going to move big up or down. I'm going to do the opposite, okay? I'm going to buy the lower one and sell the upper one. Why would I do that? Well, let's look at what price I can do it at. I can buy this lower one, this 16.3 to 16.4. I can buy it right now at 16.375. Okay, so I can buy it right down here. Okay? And then I can sell this upper one at 16.417 right now. It's like right up here. If it expires anywhere in this range, okay, I will make money. So that's good. But actually, it could go even further, and I could actually still make money. So let's actually expand that out. So that's our sell price. That's our buy price. Now let's add in, where would I be break even? Okay? Well, if we just sort of even it out and basically say, we're making or losing $25 on either side, because that's when it was about $25 when we first brought it up. So I just want to make it really simple for explanation. Okay? So if we had 75 by 25 right here, then if the market goes up, this one is going to make $25. It's a guaranteed $25. Okay, I mean if it expires above it at 3 o'clock, or 4:15. Actually, this one's 3 o'clock. So yeah, if it expires above it at 3 o'clock, I'll make $25. All right. But what about the one I sold? Well, the one I sold, I'll make money as long as it expires below 16.4, say 25 right here. Okay. So I'll still make money on that one. If it expires anywhere below that, I'll make it $1 for every tick. But unlike a binary butterfly where we lose everything if it expires above it, we actually remember, we're making $25. So I don't take on this max loss, the $75 from 16.425 up to 16.5. I don't take on a $75 loss unless it actually goes all the way up here and expires. So knowing that that's the case, and I mean, look at the range here. That's a pretty nice range if you look at the day. Check that out. So right here, if I know I'm break even, if the market expired at 16.425 at 3 o'clock, I'd be break even on this one I sold. Then I'm only losing $1 going up, but remember, I made $25 on the one I bought. So I actually am able to move my break even, okay, point to where I will make money if it expires between 16.450. And the same thing, since I'm making $25 on this one, and I have a $25 head start over here. So this one could make $25, and this one could lose $25, and I'd be at break even. So if I go down to 16.350, now I have myself a 100-point wide range on the Dow. Anywhere in between that range, and I will profit. The closer to the center, the more I'll make. If it hit right in the center, I'd make $50. I'll basically make, 49 down to 0 all the way up. So I'll make, 49, 48, 47. So every tick below it, I'll make $1 less. The most I can make is in the center. I don't expect it to expire in the center. It might. I mean, it's been crossing that level over and over and over again for the past 3 or 4 hours. But the most I would lose on the trade, or the most I could make on the trade, would be $50. And I'll make money again as long as it expires in between that range, which is pretty sweet. That's a wide range. Now, what if I were to look at this trade? Okay, before we go into that, the one other thing I'll look at is not only am I break even at these points, okay, so I'm making money anywhere in between here. Just the closer to the center, the more I make. But I'm only losing $1 for each tick outside of it. Okay, I'm not losing, it's not full loss like a binary. I'm losing $1 for each tick outside of it. And therefore, And that's why I started looking at this like an iron condor, because we got this range right here. But if I'm only losing $1 on the outside of it, it would have to move 100 points up or 100 points down from where it's at right now before I take on max loss. Well, what would max loss be? Well, if I know break-even's right in the center, and there's 50 ticks between the center and the bottom because it's 100 points wide, the most I would lose would be $50. Most I could lose up here if it ran up 100 points is $50. Now, again, it'd have to expire above or have to expire below for me to actually take on that full loss. Anywhere above that, I'd lose less than 50. Just like I said, the max I could make would be $50, but it have to expire right in the center. Anything less than that, I'll make less than 50. So if I expect it to expire anywhere in this range, sweet. That's a good trade. And so I can do that trade. I could even go, you know what, I'll set a stop loss maybe to get out of both sides if it gets, you know, say 75 points up or 75 points down. If I want to further, you know, increase my max profitability to my max loss. But just leaving that trade on, and I've done a number of these where I just left them on and done nothing with them, okay? And, you know, it's pretty sweet, pretty simple trade. Now, to get 100 points wide, now one of the things you can go over and go, well, is this a good idea? You know, is this the, you know, if I was going to do that or binaries, which one would be better? So we can go over here, and we can open the binary scanner. We can go down, and we can choose the Dow. Okay? And then choose the ones that expire here in the next couple hours. Get rid of the ones that are expiring soon in the next, you know, half hour. And go, okay, so on the Dow, to get a trade that would be at least profitable between 16,450 and 16,350, we have to go 16,450 right here, and 16,350 right here, okay? I could make $35 on that trade, and I will make $35 if it expires anywhere in between the range. But if it expires out of it, I'd make the difference between that and 100. I mean, I'd lose the difference. So I'd lose 65 to make about $35. And again, if it's just one tick outside of it, okay, if it's just one, if it's literally just right here, I'll lose 75. Whereas on this, if it's right here, I'll lose $1. Now the flip side on the spread is, if it's just one tick inside of it, only make $1 on the spread. If it's one tick inside of it on the binary, then I'll make, you know, $35. So you're going to lose more on a larger move on the binary, okay? You're going to make less on a larger move on the spread when you're doing this strategy. So it's the opposite if you're just doing directional. But anyways, just hoping, you know, you can check this out and see it, because so many people get so stuck on I'm straddling. But if you think the thing's expensive, that's not your only choice. So, and there's some cool ways to start combining these and going and going, okay, well, I can make $50, and, you know, so like one of the things that I've looked at doing and recently is, okay, I know I can make up to $50 if this thing breaks, if this thing stays inside this range. I can make up to 50. I'll probably maybe make 25. It'll probably expire somewhere in between, you know, 25 pips up, 25 pips down. What does it cost me to do this trade? So if I mean, and the market's moving right now on us, so it's a little bit more difficult. But let's say I could have put on, I'll just move it down a strike to make it more equal to what we were looking at. If it cost me about $30, $35, I could actually choose, okay, to go in and buy the lower spread and sell the upper spread, bring in a potential $50 on that, and use that to pay for my binary strangle, saying it's going to break outside of it. So now I'm going to take $50 that I can collect. I'm going to use that $50 to pay $30 for a binary strangle. And if it does happen to actually close above this, then I'll make $70 on the binary strangle. If it closes inside of it, then, you know, as long as I can, you know, collect about 30 of that 50 maximum on the spread, then I'll be break even or better. So this is also a way to hedge a strangle. When a strangle looks really expensive, but you really have confidence that it's going to do it, then, you know, if I risked maximum of $50, but I could make 70. I'd still make 20 if the thing broke out. So it gives you a lot of different ways to do the trades. And if the market stays flat, you could be profitable. If the market breaks out, you could be profitable. And there's only a small range, sort of like a dead zone, where you would actually lose on the trade, or you'd lose a little less on the trade. So that's a cool way to combine the two. And I know this is a lot of information. But we've went over straddles a lot. I've went over strangles a lot. I've went over binary butterflies a lot. I've touched on iron condors. I touched on it last week. And not last week, but if you go back to the last FOMC date and check the archive from that date, like I put the trade on. The next day I walked through the trade in detail. And so this is sort of an add-on to that of saying, hey, what if I wanted to add on some binary strangles to hedge my short straddle, then how could that benefit me? And yes, definitely that could benefit you. It could be a great strategy for you. And so I'm looking like right now, you're looking at maybe 30 to 40, $50 is just the things that's oscillating up and down. So there's a lot of opportunities right here. It's just you got to be willing to take them when they come up. And it's so important that you do understand that pricing in that range, because if you don't, what happens is the first time that I teach somebody about how to do a straddle, they go, "Oh, well, I could just straddle every hour." I'm like, that won't work. They're like, "Well, why?" Because it doesn't matter if it goes up or down. I'm like, because it has to go up or down enough to cover, the premium risk in the trade, and that's normal. That's how options work. There's, that premium price is built in, but it has to go up and down enough to cover it. So let's see. We'll look at a couple more of these on the S&P. Maybe even talk about what other ones we got coming up this week here in the next segment. But let's see. On the S&P, what do we have coming up right before the 2 o'clock here? We need 3 o'clocks. So again, just go up here and let's minimize this. Let's take this max risk to $100. Let's take the risk reward to 1. Again, this is just my straddle settings. It's not everything. Make sure I have both directions, and let's just say 30 minutes till expiration minimum, so that way I don't get the 2 o'clocks. Now I just got the 3s. That cleans it up a lot for me. And now I can go, well, I got let's go down to the S&P again. Do I have anything that really lines right up with where the S&P is at right now? That one's not great. Nope. So if I did this, I'd be a little bit lopsided. So I could do it, and this is something people have asked me before. Is like, can you, if you want to choose a little out of the money, maybe to get it cheaper, like that right there, that's a little out of the money right there. It's a little bit below where the strike is. You could do that, and then go down and find a, see if you can find a buy that maybe is a little, maybe lined up or a little higher if you can. But still, that's a $50 one. That's expecting pretty much a 7.5 to 8-point move between now and 3 o'clock, or potentially now and 4:15 on the S&P. So just be aware of what your expectation is, so you know how to correctly pick whether or not it's too expensive. Stay there, and I'll talk about how to know how far in just a minute.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. All right, so we're going through, we're looking at, until we find an S&P when we're not really finding one there. Again, the FOMC minutes are coming out in just 6 minutes, okay? So make sure you are aware of that as you're, placing your trades and hedging your trades and whatever else it is you're doing right now. Just be aware of it. Like I said, it's not a tradable event, meaning I don't expect usually big movements off of it, but there can always be a surprise, and I don't want you to get caught off guard. Let's see. Let's take a look over at... we can find anything maybe on the small caps. And what I like to find is I find something that's just ridiculously overpriced, because you will find them. And if you can find it where they're just too expensive, then that could be a great trade to go in and just invert it. But if it's not, then no big deal. So, but big thing today I want to do is just go over the, the lesson, the idea of being able to have a premium collection type strategy on spreads by just inverting and going the opposite direction. And okay, so trade right there. I mean that's pretty expensive. That would actually be one. Proximity to underlying. I mean we're looking at quite a bit on the proximity side. We're looking at about 36 pip range, which would give us a 7.2 break-even range on the Russell. So if you want to go in and sell, 1153 to 1160 and buy 1146 to 1153. Okay, if you want to do that, then that would be your trade. Or if you thought that again, 7.2 is your break even. So if you think that the Russell's going to move 14 points for a 1-to-1, then go all in and straddle the puppy. But if you don't think that, you may want to do this strategy right here, where you buy the lower one and sell the upper one. Okay, so with those pieces right there, that really is the summary on it. The next step we need to do is make sure you just have a couple details for what's coming up on the news trade plans. And let me see. Let's see if I can find. We got the retail sales tonight. I talked to you about that. Tomorrow morning, we have the new straddle strangle on the pound interest rates. And let's see, new straddle strangle on the pound interest rates right there. About 80% of the time, it breaks 50 pips with an average range of 85 to 90 pips on both the pound dollar and pound yen. So that report, again, is going to come out tomorrow morning at 7 a.m. So be ready for that one. And then we'll follow up with that with the ECB rate. But then the more, usually, unless they actually change the rate, is the press conference. And it comes out in two parts. So may want to look at getting an 11 a.m. or 3 p.m. expiration so you can take advantage of the press conference with it. And that'll be on the ECB.int under their press section. You can actually watch the conference live if you want to. But that'll be coming out. And we expect some good moves off of it. We expect about a 75 pip move off of the euro-dollar, euro-yen, both of them. And both of them with over an 80% of the time, historically, they have moved at least 50 pips. So those are really your two big news trades of the day coming out tomorrow morning. And they're not too horribly early. So it's not like those 4 a.m. News trades that are, can sometimes just be a bit of, a bit tough if, you don't want to get up at 4 o'clock in the morning. And so check those out. And that'll take care of you for that. And then don't forget, we do have the ADP reports coming out later, and the Canadian reports coming out later this Friday. So there'll be some good reports on that you can also do. But I hope you'll have a great trading day. And if I can help you in any way, don't hesitate to give me a call here on the show. I'll be glad to help you out, or email me. And I will talk to you later. Stay tuned. We have another great show coming up for you right after this.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.